Hello, and welcome to myfinanceteacher.org. In this video, we're going to have a look at a valuation of some of the most interesting three largest silver companies in the world, including PanAmerican Silver, Hecla, and First Majestic. This video is going to be published on the 28th of September 2020 for the members at myfinanceteacher.org. I might also post this video publicly on YouTube after 1 or 2 weeks. And it's very likely that by the time this video comes out on YouTube, the prices of these three largest silver mining companies in the world will already be higher. So if you want to keep a hand on the pulse of the precious metals market, as well as a range of other markets, if you scroll down here, you will see that we do discuss quite a range of markets quite frequently at myfinanceteacher.org. So if you too want to have a hand on the pulse of all those markets, consider joining us at myfinanceteacher.org. You can do that by clicking this register button on the homepage. For now, let's jump into these really interesting silver companies. So as always, the main idea of this valuation, whether it's a gold mining company or a silver mining company, is I want to look at the value of the reserves in the ground, which of course will depend on the amount of those reserves, on the prices of precious metals. It will also depend on the cost of extracting those reserves. We also have to subtract any long-term debt from the company value, calculate the remaining value per share, taking into account that shares held by strong hands, by insider hands, might actually support the prices. And we also take into account that extracting the reserves takes time, and we're going to take into account the time value of money as well. So that's the verbal description of the formula I apply to this valuation. Starting with the prices of precious metals, I'm going to have a look at three scenarios as usual. Balance scenario with a gold price of only 1,818. That's 2% below the current spot price. For silver price, I'm going to have a look at $22.1, which is also 2% below the spot price. For the conservative scenario, I'm going to look at the gold price of 1636. That is 10% below the balanced price. For gold price, I'm only going to go down 5% rather than 10% because I don't really see silver coming down to $17 or so. If you disagree with this, let me know in the comments. And this $21 is 5% below the balanced price. And for the optimistic scenario, I'm going to look at the price of gold of 1,999, nearly $2,000 per ounce, and that's only 10% above the balanced price. So even in our optimistic scenario, we are not really trying to see what would be the possible share price if the precious metals just shoot for the moon. This is basically a scenario for the valuation if gold price over the next few years averages around $1,999. And similarly for silver, I'm going to look at the price of $26.50, which is actually 20% above the balanced price. That's also because I think there is slightly better potential with silver prices over the next few years than there is with gold prices. Next, moving on to proven and probable reserves in the ground. For silver, we have the following breakdown. The proven and probable reserves for PAAS came out in August this year and showed 550.2 million ounces. So that's the number I put here. For Hecla and First Majestic, the numbers for proven and probable reserves last came out at the end of 2019. So what I do is I actually subtract the amount of precious metals produced in the first half of 2020 to arrive at the numbers shown here, 205.5 million ounces for Hecla and 80 million ounces for First Majestic. For gold, we have a following breakdown: 5.2 million ounces for PanAmerican Silver, 2.6 million ounces for Hecla, and 0.72 million ounces for First Majestic. So the general summary of this slide is that PanAmerican Silver is leading in terms of proven and probable reserves. Hecla on average has around only half of what PanAmerican Silver has, and First Majestic is only a fraction of those. Moving on to measured and indicated resources. These numbers are from the company reports without adjustment for any production. We have 805.5 million ounces for PanAmerican, 217.4 million ounces for Hecla, and 143.7 million ounces for First Majestic. For measured and indicated resources of gold,
By the way, there should be resources in the tables rather than reserves.
We have 9.4 million ounces for PanAmerican, 5.8 million ounces for Hecla, and 1.4 million ounces for First Majestic. The summary is somewhat similar as it is for proven and probable reserves. PanAmerican is leading with a large gap. Next, looking at all-in sustaining costs. All-in sustaining costs of silver for PanAmerican is $12.4 per ounce. For Hecla, the all-in sustaining cost of silver is $10.1 per ounce, but that actually includes byproduct credit. In other words, the revenue that company obtains from byproducts such as zinc and lead is taken into account to reduce the all-in sustaining costs of silver. So these numbers are not directly comparable. And for First Majestic, all-in sustaining cost of silver is $15.04, but again, the numbers are not really directly comparable because First Majestic converts gold into some sort of silver equivalent based on the ratio of their prices and calculates the all-in sustaining costs for silver equivalent as a total. Whereas for gold, for $1,015 as all-in sustaining costs for PanAmerican and $1,135 for Hecla. But again, this includes a reduction of costs due to byproducts in case of Hecla. Next, long-term debts are actually largest for Hecla at over $518 million. For PanAmerican, it's only $200 million, and for First Majestic, it's $138.6 million. Next, looking at shares outstanding. It's slightly over 210 million shares for PanAmerican. It's nearly 529 million shares for Hecla and over 219 million shares for First Majestic. Out of these shares outstanding, somewhere between 1.5% and 2% is held by insiders in the case of PanAmerican and Hecla. And the situation is quite different with First Majestic, where 11.4% is actually held by insiders. I'm going to apply a discount rate of 5%. High enough, I think, for the level of risk associated with investing into these largest silver mining companies in the world. And in terms of how long it takes to extract those reserves plus the resources, it's over 10 years in terms of PanAmerican, nearly 13 years for Hecla, and nearly 11 years for First Majestic. So finally, taking all of this information into account, we arrive at the conservative valuation such that we use a gold price of only $16.36 and a silver price of only $21. Whether it's likely or not that gold and silver prices will average these levels over the next few years is questionable, I think. And in the conservative valuation, we only include proven and probable reserves, and we simply throw out any measured and indicated resources, meaning that our valuation is really quite conservative. So with such data, the valuation for PanAmerican is $28.18, which is slightly below the ongoing market price of $31.24. For Hecla, the valuation is $4.17, which is also slightly lower than the ongoing market price of $4.92. And the situation is actually quite different for First Majestic. The valuation is only $2.45 versus the ongoing price of $9.52. So outside of the First Majestic case, for the other two companies, even if gold and silver prices were to drop substantially and stay there over the next few years, one could still argue that fundamentally, based on what the companies have in the ground, they're currently priced at close to fair valuation. Next, moving on to the balanced scenario, where all the data is the same except for the gold price, where we plug in the number of 1818, and the silver price of 22.1. Again, we only include the proven and probable reserves for the balanced valuation. This gives us a valuation of $33.89 for PanAmerican, which is slightly above the ongoing market price. For Hecla, the valuation is $5.14, which is again just tiny bit higher than the market price. And for First Majestic, this balanced valuation is only $3.01, which is still over 3 times below the ongoing market price. And lastly, looking at the optimistic valuation, if gold price were to rise only up to around $2,000 and stay there for the next few years, And if silver price were to rise only up to $26.5, where we include proven and probable reserves and actually only half, we only include half of measured and indicated resources. All of this data would give us a valuation of $68.76 for PanAmerican, which is over double the ongoing market price. For Hecla, it would give us $10.43, which is also over double the ongoing market price. And unfortunately for First Majestic, this valuation would give us $8.46 for First Majestic versus the market price of over $9.50. So something right now is creating relatively high market price for First Majestic. And one possibility for that could be large percentage of insider shares, 11.4%. And another possibility could be in recent news relating to First Majestic. We're moving on to the highlights. Back in June this year, company announced a stream project where it was buying half of the production from Springpole project in Canada at the price of 33% of ongoing silver spot price, but not higher than only $7.50. And the potential production over the mine life of that project is over 22 million ounces. So over the next few years, if silver price were to go up substantially higher, giving First Majestic a nice option to buy cheap silver at only $7.50 or below, that would actually be a very nice value added for First Majestic. And another interesting highlight for First Majestic is that between March and May, the company actually didn't sell any metals, which increased their inventory during the time when the prices of precious metals were kind of suppressed. And presumably now, with higher prices, the company can sell a big chunk of that inventory. Moving on to the highlights from PanAmerican Silver, one interesting thing I want to mention is that it also produces zinc and lead, making all three of our valuations lean a little bit more into the conservative side and increasing potential returns in the future. And another interesting thing relating to PanAmerican is they've been growing their dividend over the last few years. And if this trend continues, that might also prop up the share price quite noticeably. For Hecla, the highlights would not actually include the fact that they also produce zinc and lead, because the company has already taken that into account in their byproduct credit, which reduced their all-in sustaining costs. So unlike for PanAmerican Silver, where zinc and lead production was a bonus, for Hecla it is not actually a bonus, it's been already accounted for. And the last highlight for today is that Hecla expects strong production growth from its Lucky Friday project in the US. Production is expected to double in 2020 compared to last year and do that again next year. So if that plays out, that also might actually support share price a little bit. That's all from me for now, and just want to leave you with this question. Do you think over the next 3 years, silver price will average somewhere around $26.50? If not, what is your expectation for average silver price? Let me know in the comments. If you are watching this on YouTube, remember to hit that like button, subscribe to the channel, and you can also consider joining us at myfinancesteacher.org for frequent and detailed updates on a range of markets. You can join us by clicking this register button on the homepage. For now, I wish you a wonderful day and good luck in your trades.